Hi, Spencer here, and today I'm going to talk about how to read price charts in 15 seconds or less. First, let us recap. What are candlestick bars? So if you look at any chart, you will realize that all the charts are made up of many black and white bars, and each of these bars are very important if you want to know how to read a chart, because individually each bar will tell you the trend and the buying and selling pressure within that one bar. And cumulatively, if you look at all the different bars over time, cumulatively these bars will tell you the longer direction, the longer term trend, as well as overall who is controlling the buying and selling pressure. So that is why it is very important to master the basics of reading these candlestick bars. So I'll just do a quick recap on what these bars are. So each bar is actually made up of 4 key data points: the high, low, open, and close. So the high and the low is pretty standard, right? The high is the highest point reached within the bar, and the low is the lowest point reached within the bar. And the open and close actually is determined by the price at which it opens and the price at which it closes. So you notice that the main distinction is the color of the bar, right? There's a white bar and there's a black bar. So when price opens lower and closes higher, it gives rise to a white bar. Whereas if it opens higher and closes lower, it gives rise to a black bar. So overall, if you look at the number of white and black bars, right? Generally, the more white bars there are, the more bullish it is because price is opening lower and closing higher. Whereas the more black bars there are, the more bearish it is. So in terms of analysis, you will notice that there are two main components to every bar. The first is the shadows, which is the this little point over here, right? And at the bottom, the shadows, right? Whereas the body, right? This is the fat part of the bar, the three-dimensional part, right? So later on, when we look at the analysis, this is going to make a significant difference. So at the end of the day, what is so important about knowing the white bars and the black bars? Because at the end of the day, when we make our trading decision, the main thing that we need to know is who is controlling the market at each point of time. Is it the bulls controlling the market, or is it the bears? Because if the bulls are in control of the market, obviously the high probability trade will be to go long. Whereas if the bears are in control of the market, the best trades to be will be on the short side. So the simple way, right, to immediately be able to tell which is the better side to be trading on is to focus on this thing called the trend bars. So if you notice that in every chart, there'll be certain bars with exceptionally long body length. Now, if you recall, body length is the part of the candle, which is the fat part, right? So when you look at the fat part of the bar, you want to look for those bars, you want to identify those bars which are above average length. Because these bars will be able to tell you who is controlling the market. Right, so let's look at some examples. In this example, I've highlighted all the trend bars in this chart, and you notice that this is clearly an uptrend market because all the trend bars, the ones which are above average body length, all of them are white bars, which shows that currently the bulls are the ones controlling the market because they are the ones with all the white trend bars. So this means that if you were to decide to take a trade, the best bet for you would be to go long. And it doesn't take long to figure this out because at one glance you can easily see, right? You can easily identify which is the side that is controlling the market. So let's look at another example. In this example, you can see that the trend is clearly in a downtrend. So I've identified the bearish trend bars with the red arrow and the bullish trend bar with the green arrow. So you notice that the bears are currently in control of the market simply by looking at the majority of the trend bars, right? It is in fact a very strong bear market. Right? So this means that if you want to take any position, the odds are much higher if you look for shorting opportunities. So you notice that there are a couple of bullish trend bars over here and here. So you realize that because the trend is something that's cumulative, right? The buying and selling pressure is cumulative. So you realize that having a handful of bars in the opposite direction does not actually change the trend, because at the end of the day, it is still what the majority, right, of the bars are that determines the overall buying and selling direction. So if we move on, right, so this is actually the same chart, right? I've scrolled further on to the right. You notice that as time goes by, more and more, because the trend cannot go on forever, so eventually the trend will come to a point where the opposite side, right? So if it's a bearish trend, it will come a time where the bulls will try to fight back, right, to gain control of the market. So this is a very good example of that. You see that as the market progresses, right, more and more you see more and more bullish trend bars coming in, up to a point where it is kind of balanced, right? So that gives rise to a sideways market, right? So this is a very interesting study on the trend and how to decide when to be buying or selling. So what is so useful about this technique, right? So this technique is actually very powerful because it allows you to make very quick snap judgments, right, in 15 seconds or less, right, upon looking at a particular chart. So for example, if you are trading on the shorter term time frame and you have to make trading decisions quickly, or you do not have any like complex software or indicators, and all you have is maybe your mobile phone, right, and a blank chart. So when you look at it, right, you can simply by looking at the distribution of the bars, you can instantly zoom in and see, should I be buying or selling, right? Should I go long or should I go short, right? And to a trader, right, this being able to know, right, whether to be long or short, right, that is really the key decision that every trader has to make, right? And if you can make that decision quickly, it really gives you a very big advantage in the market. So that's all I have for this video. For more videos and market analysis, please visit us at www.synapsetrading.com, and I'll see you in the next video.